I hear a lot of people say buy international, avoid the United States, it's too exposed to tech. Tech is absolutely ripping, actually almost keeping up with what's happened with European equities, Andrew. Why is tech rallying so hard?
Well, I think, again, it is a case of it got decimated last year. Look, there's no question in my mind earnings aren't going to come in great. But the key question is how much of that is already priced in from last year. A great little statistic, Jonathan. The last 11 times we've had a down earnings year for the S&P, the market was up 9 times, right? 9 times. So all that implies is stocks already reflected a down earnings year. This is why I think the NASDAQ is ripping. Now, I've got to say, short term, be careful. Because anytime you have a situation where the NASDAQ is ripping, going into earnings season, that's a dangerous scenario.
Andrew, I'm going through some of the cuts. We talked about them earlier with Peter Cheer of Academy, just some of the job cuts out there at the moment in that sector. Some of it's brutal. Meta, 13% of the workforce, Salesforce, 10%, Alphabet, 6%, Microsoft, 5%. When you see that, clearly that's bad news for the people on the wrong end of it. For the stock specifically, Andrew, is that good news? Does that make a material difference?
I was shocked after third quarter earnings, when I listened to the third quarter earnings season in October, how these companies were very, they didn't seem to understand the downturn in the economy. And I think they're coming to realize in a quick fashion, and I think this is one of the reasons why these stocks got hammered in the fourth quarter, and they're coming back because management is proving that they are willing to pivot off this perpetual growth, reign they've really been in for, over a decade.